The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome to the show. I'm back. I'm sorry it was a little bit of a adventure to get back on the air. Had something happen medically that just completely was, out of left field, I guess. I didn't know how the internals of the appendix worked before all this happened, but I kind of feel like I have a PhD in it now. The word to the wise is, though, if you have some serious stomach cramps, don't take it lightly. Go to the hospital, get checked out. Don't sit around like I did with a fever and lament for days until they drag you in there and then operate in 2 hours. So it's a serious thing, and if you guys ever have a situation where your belly's aching like that, just please go get checked out, and for that matter, get checked out anything you feel is out of the ordinary. And don't sneeze after an operation. You may rip out some stitches internally. So that was another thing that happened. So good to be back. Thanks, Larry, for the welcome back, and Basil and all you guys in the den. I really miss being in here and trying to give you guys some information to lean on when it comes to the markets. It's like I said before, it's a really good kind of self-confirmation process for me. When I'm trading, if I talk about this, I don't know how to say this, but if I talk about things and I go against the things that I talk about, which I am pretty sure are relatively logical when it comes to probabilities and using our indicators. If I go against those things, then I'm a complete full-blown moron. So it's actually a nice feature to me to talk about these things every morning for my own trading, because it kind of, okay, Logan, this is how you portrayed this, and these are the probabilities, and these are the odds, and this is what we're doing today. For the long-term investors, I try to give a little bit of a long-term view as much as I can for guys who are not actively trading. I hope that hits home. We've been really talking about, since January last year, or it's December last year, we've been talking about, the edge has really not been there to be long, and we've tried to block out that long side of the marketplace. And I don't know, are you guys seeing my charts? Because I'm actually operating from a remote facility right now. I'm still kind of a little under the weather, and okay, you don't see my charts. Let's try to restart. How about now? I just tried to repost again. Anything? Still appears black. Huh. All right, let me do this. Let me show the scanner, guys. Let's try to repost this. Do you see the scanner now? Is that no? I tell you what, I'm going to re-log into the Tiger Den, and let's see if we can get this figured out really quick. And I apologize for the delay, guys. Let me get to the den here so we can try to post a chart or two. And I was where's my there we go. I was listening to the boob tube, listening to the Bloomberg and the CNBCs while I was laying around for the past week or so, and just so interesting to hear all the different views. I mean, you listen to that channel, and in my opinion, you can be nothing but confused. And then I'd go back to TFNN and kind of get the real deal. And that was such a refreshing thing to have that sitting there, to be able to listen to Larry and Basil and Steve Rhodes and David White and the rest of the gang, just to, kind of clear the air and be able to get some good information. Let me, Al, I'm trying to log into Trader Central here and it's not letting me in. Okay. Okay, here we go. Okay, let me see if we can, all right, let's just see if we can restart this chart and how about now? We got a chart now? God. All right, I'll tell you what, we're gonna talk through this first session, and I'm gonna try to get our charts up. I don't know why this is not working this morning. I haven't done anything different. Let's see. And I'm going to just reconfirm one more time. You guys are not seeing the scanner or the charts. Yes or no? Black. Jesus. Tell you what, let's use another screen here. Let me try one more thing. And I'm going to put my charts over here on another monitor, and we're going to try this one more time. How about now? Black. Jesus. All right. Okay, so I tell you what, we're gonna keep moving here. I'm gonna go through some of the things I wanted to go through and basically name some instruments, and I'll kind of go through where the levels are. I do not know. Dang, camera settings. I have the settings right in here, Al. I tell you what, we're going to look at it at the break. So the S&Ps, what's going on with these things? Again, we've looked at the risk was to be long for a long time. Really almost an entire year, and that was caused by looking at our breadth indicators, mainly the net profile breadth, positive or negative, as we always talk about with our breadth indicators within the scanner. And we put some really good enhancements in here. I wanted to show you this today. Programmers have been working their butt off. We've got notifications in here now, which we're going to be rolling out this week, which is basically kind of a heads up alert system that's going to alert you of things happening real time. And also, as you hit on these speed dials or these odometers, it's actually giving you a lot more information. The index or ETF profile levels relative to the charts that you see and relative to the breadth crossovers that you see. And one of the things that we want to talk about is as the VIX has continued to climb and stay at a pretty, I wouldn't call it a high level, but a level that's concerning. We have to shift around and look at smaller time frame breadths for momentum changes. So again, looking at the broad breadth situation on the S&Ps, we know, and if I wish you could see my screen, the entire globe on a long-term basis has eaten to heck and is breadth profile negative. As I go into the S&Ps, this weekly crossover has really not wavered and not even shown any signs really of getting close to turning positive since that June 4th area that we talked about, where it first started crossing over. We got close to crossing over back in the 1st of August, but it never really happened. So on a long-term basis, you long-term guys, really, it's been kind of the writing on the wall that we were supposed to, on a long-term basis, sell resistance on the index itself and actually look for weak stocks and shorting opportunities. And I know you're going, okay, Logan, tell us something that's going to happen in the future. These are things that were, again, painted very clearly. Now, what do you do now? As we look at this, and as we look at, where the S&Ps are, and as we look at our charts that you're not seeing, we're sitting basically at that unfair low on our long-term weekly. We got a little bit of a bounce off of it. There's no doubt about that. But that unfair low on our weeklies at 1906.5, and that's plainly stated in the scanner. We are sitting kind of at the precipice of a little bit of a cliff. Now, as we had, and we talk about this all the time, as we have little indications where it might be time to take some weight off, we've had some indications along the way on the short side. But, all things considered, with the profiles on our shorter term time frames being the daily being above, price action staying below, and that breadth indicator really telling us that, we want to continue to, again, turn the rinse the same way, continue to sell resistance, find those inflection points to lean on. If we get stopped out, we get stopped out. Them's the breaks, and that's trading. But you long-term guys really have had no reason, even with the volatility, to really start peeling out of shorts or, net effect, really even think about going long. So, and again, we've had some major rallies. We got back above 2,000, I think, when I was under the weather here. But again, the long-term indicators have stayed relatively bearish. And, I missed some longs myself. I had some people monitoring my account, and that's okay. Again, the theme of the equation has been to really lean on trying to sell resistance, and if we get stopped out, we get stopped out. So that's the situation on the S&Ps. You've got a couple of major things going on down here around 1906.5. This morning we sold off a little bit. The S&Ps are down, 11, 12 S&Ps right now. And you might be saying, well, should I be buying the gap down? In my opinion, again, I hate to beat a dead horse, but, in my opinion, we continue to really want to pass on longs. We want to sell breakdowns and sell resistance, and that's it. That's where the probabilities and the leverage are, in my opinion. All right, let's take a look at the dollar really quick, and hopefully we'll get our charts up right after try it one more time. Let me know if you see anything. We're going to explore this a little deeper on the break. You still got that 95 or 96, let's call it even, on the December contract on the dollar. That's going to be kind of your uncle point. Again, I'm not a big fan of going short the dollar. I'm a big fan of putting stops below long-term inflection points and letting this thing breathe up. Now, I got stopped out of this trade. I'm back in this trade long the dollar, and that's where, the stops have to be oriented. Okay. All right. We're going to go to break. I'm going to try to figure out this technical thing so you guys can see some charts. And thanks for joining us today. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're probably going to be flying blind with no charts today, so we're going to probably give up on that for the show. But I'm going to be doing some, relaying of information from the charts. We've actually got a situation, in my opinion, on the euro. Again, this has been, we talked about this 112.25, 112.20 area being a big deal. Stops oriented around there, and then now we've got on a long-term basis on our long-term euro, we've got 113.52 as a lid now. I'm still extremely short-minded on this particular product, even though we had no mystery to anyone. They didn't raise rates. Wow, we talked about that forever, and that's a gamble, rolling the dice to think that they're going to raise rates or not raise rates. We always talk about trading the reaction, not the action, and I think the reaction in this case, and I'm looking at the euro again on a long-term basis, I fully believe we can revisit 108.99, 109, neighborhood, and even head lower on this product. It's almost like you find resistance, you get stopped out, you find resistance again, you get stopped out, and you let this thing breathe. And the targets right now on the long term are around 109 on this. Long-term traders got to be stops above 113.52 now. On the shorter term on the euro, and again, we've got a little bit of you could kind of look at it as a little bit of a basing action on the intermediate time frame, the daily that we look at. And I know you guys aren't seeing this, but we've got another breakdown that could happen below, let's just call it 110.88 right now. So if we get past there, we might have some clear sailing to that 109. But right now, again, I'm looking at this as a long-term basis, trying not to get shaken out, trading a little lighter on these particular products, because when this thing falls apart, it really, a lot of people are going to be running for the door on this particular product, in my opinion. We're going to just kind of talk briefly about some currencies here. The Australian dollar, just to get some updates, we had a little bit of a snapback rally on this. We were told ahead of time, via the scanner and, looking at the charts here, that we had a chance to kind of get out of this for a little bit and take some profits. New profile, appeared on this product. Now we're below that profile, and now you can orient stops a little bit lower. 71.70 rounded off, stops above there. And again, people are going, wow, this thing's probably on sale. That's not the case. Things on their lows can go lower, things on their highs can go higher. And I don't really see any real reason that there's any chance to really do a lot of bottom picking. Shorter term traders, you can orient stops above 70.46 on this particular product. And again, I know we've come down pretty hard from around 73 recently, but we're kind of consolidating below daily profiles, below weekly profiles, as if we may start spinning, getting some momentum to take another shot downside. Something else that's kind of been near and dear to my heart, the Canadian dollar. We've talked about not shorting this thing. It's not too high. We did have a little bit of a pullback on this the past, 2 weeks ago. But again, now we're trading above profiles here. And we always talk about, on the long side, buying breakouts, buying support. Right now, you've got that support at around 133.04 on the Canadian dollar. And again, this thing is just sitting on the launching pad, in my opinion, to go higher. And you might be saying, well, God, when has the Canadian dollar been this, crushed relative to the U.S. dollar? Remember, guys, it doesn't have to make sense. There's a lot of oil problems out there. That country's, in the same vein as the Australian dollar when it comes to digging a hole and selling things in the hole. And right now, if you've kind of been listening to the news, you know that Glencore is just getting incredibly bashed right now, which is a completely commodity-driven company, publicly traded, and they are just having issues. So again, the Canadian dollar can get devalued more. You've kind of got a DMZ between 132.25 and 133.04 for support on this to actually move higher, and that means the Canadian dollar is going to get devalued even more, in my opinion. And again, if you want to take some shots on the short side, that's up to you. But right now, I don't see a lot of confirmations that it's okay to do that. So I'd rather keep turning the wrench the same way on situations like that. And again, that's so easy to say the trend is your friend, but again, picking tops and bottoms, you get hurt a little bit here. Let's go to the 10-year. I'm just going to make a couple of comments because you guys aren't seeing this. Got it up. We're going to talk about this a little bit when we come back from this break, and guys, stay tuned.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. I'm operating remotely tonight, not in the office, so the connection's a little weird, and we're not posting charts. So apologize for that. Again, if you're joining us late. I think we've got a caller with us today. Scott from Safety Harbor, Florida. Are you there?
I had a question, yes, sir, about Alcoa. A lot of things happening with Alcoa with a split and this and that. Where do you see that going from here? I'm out of it right now, but seems interesting.
Okay. Yeah, let me pull it up for you, Scott. And again, I apologize for not being able to show you the charts. I'm just going to give you a little bit of a play-by-play here.
Yeah, when it was up at $10 last week, and then it fell off. You know, the
pulling it up right now.
Mm-hmm.
Okay. I'm waiting for it to come up here. Yeah, here we go. I tell you what, the long-term view, I guess, is more probably interesting to you right now. I'm going to be able to kind of
is a week.
Get my screen going here. You know? And again, got a little bit. Okay. Let me see if I can get it up here so I can make some comments.
Mm-hmm.
What I'm seeing right now is you got some support at $8.84.
Mm-hmm.
All right, and why is that the case? That's because we've got a weekly profile that has appeared on this. It appeared about, it looks like, maybe 2 weeks ago. We had a little bit of an indication that the downtrend was in jeopardy about 2 to 3 weeks ago. We had an orange bar appear, and that means that we probably are going to have a new profile lock in the following week, and that happened. And that new profile is telling me that we've got 1057 up top and 884 down below. And what does that mean? And we've kind of come back down and looked at this 884. There's a couple of things going on here. One of them is stocks don't go in a straight line, and this particular stock has been on our radar screen on this show literally since we started breaking down below 15. It's been a really good short candidate, and it's been something that really has shown its hand continuously, in my opinion, on the short side, especially when we've had little bounces in the market and this thing hasn't really cooperated. I understand that the sector for this particular stock has really, it's just not been an attractive situation. So if a weak holding period is a long-term thing for you, you do have a chance to try to bottom pick here around 884, but my complete sentiments on the market in general is that we're going to head lower, and I'm not a big fan of trying to buy stocks right now, really, especially ones that have been
this morning. It blew, it's 60 cents higher right now than it was Friday. So.
Yeah, well, let me take a look at some pre-market action.
How do you feel about the split and how the split is going to affect the stock?
I'm sorry, I missed that one. Could you say that again?
How do you feel the split is going to affect the stock?
I think it's a blip on the radar screen. I'm not a big fan of going long Alcoa. You've got much better opportunities out there. This is, again, it's an $8 stock. What's your downside? $8 or not? I mean, it's going to have little blips like this, but I think people are probably going to sell into this. I don't think this sector in general has really got a lot going for it, and I think there's going to be more of a washout situation. And again, you've got stronger stocks to buy out there, and but the good news is for you is 884 is Custer's last stance. That's the Maginot line for this stock, and you got a little bit of a target situation up there around between 1008 and 1057 if you're going to play that game. But that's about all she wrote on this, I think, from a bounce situation.
Mm-hmm. All right, thank you very much.
Hello. You're welcome, Scott. Thanks for calling in. Case in point. Again, I'm just not a big fan of buying stocks right now, and no matter what, these split news, what have you. I think these are things that people are just going to sell into. We are not getting above our weekly unfair highs, even with this information. And if you look at Alcoa. And, this has been a stock we've been bashing on this show in particular. This has almost been the benchmark of things not to buy that I've been talking about. We got down to $8. We obviously had a little bit of bounce into 10. That's a 20% move. But again, you're playing with fire, in my opinion, and you've got much better opportunities, things that are showing their hand a lot better so than to try to. And again, I've done this too. The stock's too low, the stock's too high. But again, I think you've got a sector situation here that's just overbearing when it comes to things trying to clear the air and get clean and clear of trading ranges, or be kind of hang in there and move higher. I just don't see that happening long term on Alcoa. And again, we've not to beat a dead horse, but we've been talking about this for a long time. So. That's my thoughts on Alcoa, unfortunately, for anybody who's long it. Let me go back to the 10-year really quick, because, this is something that, let me see if I can get my screen here to react. Okay, let me, okay, here we go. We're going to go back to the 10-year. My goodness, this connection is horrendous here. go. All right, so on the 10-year, the situation here is, we've talked about this 127.11 area being a very, very important situation for this particular instrument. That's still the case. And why is that the case? We've talked about this till we're blue in the face about, not being short treasuries. And that 127.11 was kind of where we had to get above, and then we've had some pullbacks into that support area. And we talked about targets initially were going to be 128.17. We reached a high last week of 127.15, or 128.17. We reached a high last week of 128.15. We got to that neighborhood, we backed off. Now, what do you do on a long-term basis? That particular trade has really kind of worked out, and right now, in my opinion, we're right smack dab in the middle of a fair auction that we've got to pay attention to. And on the daily situation, we're kind of in the middle of that fair auction also. So, what do you do with this? In my opinion, you've got to wait and see on the 10-year now. You've got support again around 127.11 into 127.20. Stops below there based on your appetite for risk, and you've got possibly targets up top again that may be met around 128.17. What do I think is going to ultimately happen with this? Believe it or not, folks, I think we're going to do a moonshot on this particular product again. And it's not exactly acting super well relative to the market selling off. But again, I think at some point, everybody's going to realize that they're going to be terrified to raise rates. Fundamentally, that's going to start being built into this thing, and the U.S. stock market is going to basically predicate that particular mindset that they're going to look at the stock market exclusively, and look for any reason basically to not raise rates. Oh, China, they've thrown everything at it to not raise rates from a reason standpoint, and this is going to be the next reason. And I think the 10-year and the 30-year are just going to, freak everybody out and run some shorts out that were kind of piling into this as they were thinking more than likely that they're going to be on a schedule to raise rates. I just don't see it happening, and I see the 10-year and the 30-year climbing. So that's the situation there. Let's take a look at gold now. Gold is something, we've looked at this, and we've talked about a kind of a hole in the marketplace on a long-term basis between 1125 and 1168, up in that area. As you've noticed, we've had a lot of volatility in that particular hole. And we talked about, I personally was looking at selling gold again around 1125, got stopped out of it, closed above on a long term, came back and retested. And now we're kind of, just kind of migrating south here. So, am I a buyer of gold on support here at 1125? No. On a short term day trading basis, you got some opportunities, but I'm kind of staying away from gold because it's relatively directionless in this hole, and I'm not a big fan of not having a lot of probability in my favor to trade an instrument like this. I think it's time for the floor traders to really scoop up everybody else's money right now. There's not a lot of direction. That's exactly what they love. I don't see any trend developing here right now. So take that for what it's worth. Let's take a look at silver really quick. Yeah, that has been a nice little area between 1125 and 1160, 1168. We talked about silver a lot before I actually had the appendix explode. This is something that looks a lot more damaging on the downside. Obviously, it's this long-term basis. You got this 1460 sitting down here. I don't see a lot of reasons to be looking at silver to try to pick bottoms here or to even nibble. Again, this is something I think you just got to stay away from and just kind of wait and see. If we break back out and we get back above these 1523s, 24s, going to feel a lot better about being able to catch silver on a good run. If you got to buy silver right now, that you can orient stops around that 1460 level on the bottom, but this just does not look good. Let me close out my e-signal and restart it here. Let me see if that will help. No, I don't want to do that. Okay. So we're gonna try to get you guys some charts. I'm gonna try to restart something here really quick. shouldn't have done that. While we're waiting, you know, what I just went through, we talked a little bit about on opening the show. Again, we talked about if you guys have any deep cramps in your abdomen, please go to the hospital and get it figured out. I lucked up completely and got a great doctor, surgeon here who, you know, kind of educated me in 2 or 3 hours before we went into surgery, you know, to kind of let me know exactly what was going on and the risk actually involved. You know, it's amazing that, you know, I was asking him, I was like, well, what happens in the old days if something like this happens? And again, we're waiting for our charts to come back up right now. If something like this happens, you know, what's the downside? Like, how do they kind of how do they maneuver through the minefield of an appendix exploding? And he said basically that, you know, it's almost assured death, because the infection, what happens is you get something clogged in there. It's a little organ, I guess you can call it an organ, between the large intestines and the small intestines. It gets clogged up. It gets implodes, and all the infection just basically continues to spread out in your abdomen area. And basically your body starts trying to wall it off, forms masses. And I was like, well, what if, I mean, they basically had to take, I don't know if I need to be telling you this, but I hope everybody's not had breakfast so far. They basically have to take your insides out and wash them to basically get all the infection out. And I said, what if this happens on a camping trip, or somebody, you know, gets basically you're, you know, out of luck. So interesting experience. Guys, I cannot get my charts up. Let me see what's going on here. All right. Desktop. Here we go. I think we're back in business. Okay. While we're waiting for our charts to come back up, let's see here. Send later. Here we go. Finally. Trying it one more time. Do you guys see anything yet? Anything on my screen, or is it still black? I can't believe this. Nothing? All right. Well, anyway, we talked about silver. We're back up in business. Sorry about that. We'll try to get this fixed by tomorrow. We talked about silver. We talked about gold. We talked about the 10-year. We talked about some of the generics. I'm going to go right into tell you what, after the break, we're going to come back. Hopefully I have all this technical stuff figured out. I'm flying a little blind here, guys. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Doing this from a remote location today. Just still under the weather here, but we're going to talk about crude oil a little bit. I can't show any charts right now for some reason. Excuse me. The support on crude oil right now is around 42, and then you got some more support around 40.30. Is it a time to buy it? Again, we've been looking at this as kind of a sell resistance situation. The last big number up top was 49.27. This is the November contract we're talking about right now. And do you step in and start buying crude oil right now? The answer, in my opinion, is no. You got, again, support at 42 if you want to take some shots down there for some kind of day trading bounces, and then you've got some relatively lower prices around 40.30 that's just going to have to make a hold, or we're just going to start playing around with the $30 price range on crude oil right now. That's the situation on crude oil. We're going to hit I'm going to kill this ISP here. We're going to take a look and just review really quick some November bean situations here. Again, the big numbers up top, 9.10 on November beans. That's the new crop situation everybody kind of pays attention to. You got some targets down below now with a new profile that's appearing and locked in now at 867.5. So again, the long-term numbers, 867.5. You got some other support around 861, 62, and you've got 910 and 913 up top. So those are weekly combined with daily inflection points, and where we're at right now, we're kind of smack dab in the middle of that range. Don't see a lot of leverage here to trade November beans until you get into those inflection point ranges. And then what do? Believe it or not, I'm not a big fan of buying beans on the bounce. I'd love to sell resistance or sell the breakdowns. So that's kind of where I'm at with November beans. Unfortunately, if you guys are feeling rosy about buying them, gotta wait on that one. Okay, just to review a little bit here before we hit the get off the air here, and Larry's going to take over. I want to get my S&Ps back up. Oh Lordy, if I can get my charts to work halfway decent today. This is what happens when you're not on a stable connection in the Philippines. Here we go. So let's take a look at the S&Ps again, just to do a little wrap up here, just to restate some numbers that we talked about before. 1907, that general area, that's one of the big numbers on the S&Ps. Do I think we should be buying this based on a lot of the things that we look at? No. I'm trying to wait for this to come up here. Tomorrow. All right, so I'm going to pull up our scanner actually to pull these numbers up really quick here just to make things easy. Going back to our S&Ps, big numbers again, 1906, 1907, down below. I'm not a big fan of buying these bounces. You got up top, you got a POC around 1962. So, what do you do with this on the S&P side right now? In my opinion, you got to wait and see if we break down below 1906, 1907, or start getting into some higher levels. Namely, you've got 1928.5 on the 240s. That's staring you in the face. Top of the box there. That's a resistance area on the short term. And breakdowns below 1906, 1907. Guys, thanks for joining us. Sorry about my connection today. We'll try getting into the office tomorrow finally, and hopefully get back in gear. Stay tuned for Larry. Pick it up tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.